Good morning. Good morning.
How you guys doing?
Yes, it is a nice, bright, sunny, gorgeous uh, April 9th, Tuesday morning. Beautiful, clear skies, unlike yesterday. Did you guys check out the eclipse? You guys managed to do that? I wanted to check it out, but it was cloudy skies. Couldn't see anything. Really bad. Well, anyways, we're going to be checking out something really interesting today. I want to spend some time looking at gold and silver. They're making some serious moves lately, especially gold. Look at gold. Look where gold's at right now. Actually, we had a target there of 2368, which we're just falling short of. Yeah, looking pretty good. It's been very strong, but it's buying coming in and taking price to all-time highs. I don't like trading things that are making all-time highs because how are you ever going to judge where price is going to stop being bought? How are you going to know that? The thing is, you wouldn't know where it's going to stop. So, how can you trade successfully with something where something is just so unknown? It's, going to all-time highs. There's unknowns. How much is there going to be of buying? How long is this momentum going to last? So I don't like to touch things at all-time highs. I like the institutions to show me what they're doing with their positions, and then I will take advantage. So we've looked at the gold CFTC data, and we've seen that they've been adding to their long positions, and we can see that since beginning of March, 264, 283. Okay, now we're in the 281s. We saw some profit taking back in March. That was contracts expiring. But it's been a steady increase since then, 281s. And we also looked at historical numbers and looked at what took place when institutional positions reached these highs before. We looked at 260s, profit taking pushed to the downside, 280s, profit taking to the downside. Okay, again, 280s, short-term profit taking, and it pushed to the downside. And I also mentioned how on the weekly chart, if we zoom in here, we have basing, and then we have 1, 2 large momentum candles after basing. Now, typically, this is what we see is 2 very large candles will be created after basing. And then after that, there is a pause in the market. So we've been talking about how this month's candle will likely end up being ranging. And then we'll look at the CFTC data and we'll see whether or not some significant profit taking is happening up here. But I've mentioned this before to you guys, how it's very likely that we're going to see some ranging in the month of April. Okay, simply because of what is taking place here on the chart. And we can take a look here at the monthly chart to see what we're likely about to see. And as you can see, we have basing and how many candles? 1, 2 momentum candles. Okay, so that time for ranging is approaching us. Look at the distance that we traveled in that candle. Look at the distance here, almost as long as the first one, but it doesn't have to be as long. The bottom line is the big moves have happened. Okay. So if price were to enter into some type of ranging, what would be required and what would it look like? What would be taking place there? Well, like I was saying, when you look at the positions held by institutions, we've seen we've seen how in the past, every time they reached these numbers, what followed afterwards was a time of profit taking, right? 280s, 290s, and then profit taking. You see how long positions decreased all the way down to 211. So what would you need? What would you need if you're the banks? What would you need if you're now at 280 again? You'd need retail traders to take off those long positions from you, right? If you're going to take profits on longs, you need somebody to be buying. So how do you trigger retail traders into buying at these highs? I mean, this is quite crazy. I mean, at least for me, right? Prices are so high. How do you substantiate a buy? How do you come to the conclusion that buying at these highs are a good idea? So I'm scanning the markets. I'm scanning the news. I'm scanning social media, and looking to see what's out there. And I'm seeing these articles. And here's one, for example. The gold price is up nearly 19% in this rally, but you haven't seen anything yet. Okay, that's pretty darn bullish. You haven't seen anything yet. And the thing is that what's wonderful about these articles is they are pure speculation, complete speculation, right? There is no actual proof that anything is going to happen. There's no evidence to support that something is legitimately going to take place. It's just pure speculation. Let's read this article. Although Western investors continue to ignore gold, even as prices continue to hit record highs, they are no longer actively getting in the way of higher prices, which means the current rally has legs to run higher. Okay? Does that really mean that? According to one market analyst in an interview with Kitco News, Robert Mintner, Director of Investment Strategy at ABRDN, said that gold's rally to record highs above $2,350 an ounce is just getting started. And it's only a matter of time before retail investors jump into gold-backed exchange-traded funds to kick off the next major leg higher. Mintner's comments come as ABRDN celebrates a significant milestone with its gold-backed ETF. Okay. Last week, assets under management in physical gold shares, ETF S Gold, surpassed $3 billion for the first time. Okay. So now you're starting to see, why the article is being written. So we look at RDN, physical gold shares ETF. Okay. Yeah, it looks good. Yeah, very good. But just as with the stock, as with the gold futures, we can see on the monthly chart basing. And what do you see here? Big, tall momentum candles to the upside. And you don't have to take my word for it. Just look at price action. And take a look at what takes place when you have basing and 1, 2 big candles. Take a look at what happens. Okay, like I said, you don't have to take my word for it. I don't want you to take my word for it. Basing, 1, 2 big candles. Okay? Things happen after big momentum candles. Around 2 of them. It's usually around 2. Okay? Pauses in market. Look. Basing. 1, 2 candles. And then drop. Alright? So, same thing, like 1, 2, same thing. So, so we're having that situation again. So, those investors who bought this ETF, who bought it in the $19, don't you think they would love to take profits now at these highs? But, I mean, they're not going to be able to take profits at those highs unless they have investors willing to buy it from them at those highs. Okay. So then we have articles like this, right? Oh, it's just getting started. Okay. So remember context. You see these media headlines, and then you put it into the proper context, and you start to recognize what's going on here. Let's look at another article. Why record-setting gold prices will fend off headwinds and see 30% more upside, according to famed economist David Rosenberg. And see 30% more upside. I mean, this was just written 2 days ago. It's going to see 30% more upside. 30% more upside is kind of crazy. We're looking at, let's see. 30% more upside. Okay, you're looking at over 3,000. Over 3,000. Can it get up there? Yes, sure, it can. Is there any proof of it about to happen right now? Zero. Okay, zero proof. The only proof that this could happen is that you have an upward trend on the monthly chart. Okay? But does an upward trend, does it suggest that it's going to go up another 30% to 3,000? It says that price is moving upwards. It says that for the time being, pressure should be to the upside. But if anybody knows anything about the proportions of price, which we deal with a lot at the school, we talk about it quite a lot because it's extremely important. You look at this ascending trend. Let me just show you something with a brown arrow here, okay? Look at the distance that price moved away from that trend line. Look at the distance that price is moving away from the trend line now. So logically, what does that tell you? When you're dealing with the reality of what is taking place, what does this tell you? Based on where price is right now, this ascending trend and the proportions of this ascending trend, what do you think is more likely? That price is going to rally to 3,000, or that price is likely going to pause and then drop in the next few months, right? Think logically. Logically is we're likely going to see a pause and a drop. Okay. So if you knew that, and you knew it would help your clients, it would help your company and those that you're loyal to, do you think maybe you would write an article like this? Right. Okay. So if you knew that it was likely going to pause and drop, do you think it would be socially responsible to be coming out with an article like this at that time? Do you think it'd be right? I don't think so. I don't think that's right to do something like that. Okay? If you're looking after the interests of your fellow traders, you wouldn't be coming out with an article like this. Why aren't these articles talking about this ascending trend on the monthly chart and the proportions of price and where price is right now, and then posing the question to you, saying, do you think it's a good idea to be buying at these highs? Why do you think they're not doing that? Because nobody would be buying at those highs. They'd be using their actual brain to come to the conclusion that it's probably not a good time, right? So what if price was to pause and drop? What do you think? What if I told you that after this pause and drop, not only is it contacting an ascending trend line, but it is contacting a significant area where we know for a fact the major institutions have buy orders there? Then I told you, it's likely that price can go up to 2,500. You'd say, well, let me do some calculations. Let me look at the CFTC data and see what happened last time price was in this 2,000 range. Let's see if they added to long positions based on CFTC data. And let me do some calculations. Let me look at the proportions of this ascending trend. Let me see if it's within reason that price rallies up from where it is right now up to 2,500. And you draw some arrows and you look at the proportions and you're like, yeah, that's extremely reasonable. Buying at 2,000 with a target of 2,500, that would be extremely reasonable. Okay, right. You know what would increase the odds of that? If you were to scan the media, go on Google and type up gold price and look at the news, and you see articles saying things like, "Oh, gold has dropped from its highs of 2,300 down to 2,000. Some experts are worried about this and about that, and gold price. We could see another 20% drop." When you see that, and you look at the reality of the situation with gold, and you see that when the odds are high for you to buy, the media headlines are suggesting that it's probably not a good idea because price is likely going to drop even further, okay? When the odds are low of you buying and it going higher, that's when the media comes out with articles suggesting that it's going to go even higher. Do you understand? So understanding odds, means you have to understand what is really taking place on charts, okay? Whether or not a trend is in existence, if it's a high quality trend, look at the proportions. You have to study what you can actually see. And the greatest thing that we have when discovering what's taking place in the market is price action. It's right there. They cannot hide themselves. Price action and the Japanese candlesticks are the greatest thing that was ever delivered to us. I remember years ago when I first started getting into trading, my father had a cleaning business, commercial building cleaning business, and I was working with him. And in one of the buildings that we cleaned, all of a sudden this new office opened up, and went inside to introduce myself to this new client. And it was a bunch of young guys with a bunch of computers and a bunch of screens, and it was a trading firm. And I asked them, I'm like, "Oh, what are you guys doing in here?" "Oh, we trade." "Oh, you trade the financial markets?" And this was interesting because I had already begun taking some courses about trading. And so it piqued my interest when I was having this conversation with these gentlemen. I said, "Oh, so what do you guys think about the markets, and how are you guys trading? What kind of, strategies are you using?" And one thing that really stuck out to me, one of the things that the gentleman told me, he goes, "You know what? It used to be high odds to trade these markets, but now with all these algorithms and stuff, trading a lot faster than us, the chances of us making money have deeply lessened, deeply lessened." And I thought about that for a long time, and it's always been in the back of my mind ever since he told me that. And I have to completely disagree, okay? I have to say that the odds have never been higher for trading the markets. And we have to thank those algorithms. Now, this is only true if you understand what is taking place in the markets. If you don't understand what's taking place in the markets, then, yeah, the odds are stacked against you because the algorithms are working so perfectly, creating these scenarios on the charts and creating these chart patterns that you are taught to learn about. And but again, if you understand what is truly taking place, locating the institutional buying and selling, being able to spot an improper structure from a proper structure, and the meaning of that, I don't think there's ever been a better time to be able to trade successfully in the markets. So that's just my personal opinion. And with that said, I will leave you this morning. That's just some thoughts of mine with respect to gold. So keep that in mind, the current situation and where we are. And keep an eye on the media headlines and see what they say regarding gold. I'd be very cautious, even thinking about getting into gold. Am I interested in investing in some gold? Sure, I am. But I've been patient, and I'm waiting for the opportunity to present itself where it is high odds for me to get involved. And right now, it's not high odds. When it is high odds, I'll pull the trigger, and we'll hopefully profit from that trade when it happens. But at least I'll know that the odds are in my favor that the trade will be successful. All right, ladies and gents, thank you very much. That's it for today's show. We'll see you again tomorrow morning. Hit the like and subscribe if you're not subscribers yet. Hit the like and please share this video with your fellow traders. Let's get the word out there and help as many as we can. All right, folks, that's it. Enjoy the rest of your day. We'll talk to you later. Thanks again. Take care.